Trading metals in the recent months has been a true gold mine for many traders. Gold, silver and copper have all been rising on a daily basis, hitting new highs regularly. Gold is trading above $5,000 per ounce for the first time in history, while silver has surpassed the $100 mark. For years, these price levels were considered just a theoretical number, and now they are the reality. Today, at the Trading Pit, we want to dive deeper into this topic and see what are the reasons and what stands behind it. Why the commodities market is different from any other, what are the actual reasons behind the current growth, and how commodities trading has changed in the recent months. So let's start by understanding the nature of the commodities market. The commodities market operates under completely different logic from Forex, indices, futures, or crypto. Commodities are real, meaning they're real physical assets with direct industrial and economical utility. Their value is not driven by narratives, earnings reports, or user adoption, but by supply, demand, and global macroeconomic conditions. On one side, we have production cycles which are slow and capital intensive, and at the same time, demand is global and persistent. This creates structurally tighter markets, where the imbalances between supply and demand lead to strong and sustainable market movements, rather than just short-lived spikes. This results in a higher trading volume. In the Trading Pit, we have 63% of all trades being traded on gold, with half of the clients having at least 30% of their trades on gold. Imagine how big is the impact on the current market. The fact that 63% of all trades are taken on gold is clearly because it's an institutional asset with a sustained price movements. Let's listen to Roberto, the trader with 10 years of experience who chooses gold as his favorite asset.
My strategy is following external events and aligning these external events with something technical in the charts. And if you trade commodities, it's very, very easy to do so. At that time, Bitcoin wasn't such an institutional asset like it's nowadays. It's a bit correlated to S&P 500. It's a bit correlated to all the companies listed in that index. So it's much more liquid. So it's much more institutional as an asset.
So what is the reason behind current growth? The current bull run in metals is not driven by a single factor, but by multiple long-term reasons. Monetary expansion over the recent years has increased global liquidity. As purchasing power erodes, capital naturally will move to hard assets that preserve value over time. At the same time, supply constraints remain unresolved. Years of underinvestment in mining, stricter environmental regulations, and geopolitical distractions have limited the ability to increase production. Demand, on the other side, continues to rise. Industrial usage, infrastructure development, energy transition projects, and central bank accumulations are all accelerating simultaneously. Metals benefit directly from declining trust in fiat currencies. This imbalance between constrained supply and expanding demand creates persistent upward pressure on price. That's why, for example, at the Trading Pit, we can see that 58% of all trades taken on gold are long. It clearly shows bullish dominance. Very interesting fact that all traders on the earnings phase trading metals have 46% of win rate, which of course results in expected profitability when catching these long trades. Darius is an example of a trader with many years of experience trading gold, and it always benefited him, resulting in $32,000 in total rewards. Let's hear his thoughts about trading gold.
What was your most traded asset in 2025 so far?
Well, to be honest, it was just gold because I'm only trading gold, so this is my top asset.
Is it your top asset no matter what, or are you diversifying a little bit?
No, it's only gold since already 3 years now.
Okay, so you're taking advantage of the gold rally. What do you think is going to happen next?
Well, I think gold is gonna continue with the rally. Probably right now, it's gonna pull back a little bit, reaccumulate, but I'm very sure it's gonna go up. we are living in very crazy times right now, and that's exactly where everything goes into gold.
So now let's dive a bit deeper into the topic how trading metals changed recently. Trading metals today looks completely different from a few years ago. Volatility has increased and it became more directional. Instead of sharp reversals, markets are showing extended trends with consolidation. Also, institutional participation has grown significantly. Large funds, entities, and long-term investors are now more active, reducing randomness and increasing trend stability. Retail traders also have broader access through modern platforms, tighter spreads, and advanced analytical tools. As a result, metals trading has shifted from short-term speculations towards trend-based strategies focused on macro alignment. As a result, we see 64% of reward-eligible accounts at the trading pit have at least 30% of their trades on gold. These are just some impressive numbers, isn't it? Faye, for example, was one of the traders in this list. She secured a total of 27,000 in rewards, trading gold and in using simple strategy based on trend direction. Let's listen to what she has to say about it.
And then for gold, really just support and resistance. Trend is your friend, obviously, when it comes to gold, and that definitely was a factor in the payout that I got last week. I managed to catch it just before it turned, for the sell off, which was great. We don't always get those big runs, so you have to take them when they're there. But yeah, top-down analysis, obviously, and then my entries are kind of on the 15-minute time frame. I used to trade with a very small stop loss, looking for a big RR, but things change, and now if I can get a 1-to-1, 1-to-2, I'm happy. And anything smaller than 100 pip stop loss kind of makes me nervous on gold. So 15-minute time frame, support and resistance. I don't wait for a candle closure. I did start doing that for a while, but I don't actually think it's necessary. When there's volume and gold wants to break a level, it will just break it, and you can miss quite a lot of the move by waiting for a candle closure, I find.
So now metals are entering phase where fundamental factors are driving long-term trend moves, not short-term speculations. Understanding the nature of commodities, the reasons behind the growth, and the way metals are traded today is key to navigating in these trend moves. Remember that the market will always reward people with discipline, preparation, and long-term vision. Good luck to all traders, and remember to trade metals with clarity and precision.